Hey everyone. I'm Carl. Welcome to the Renko Trading channel, where I share experimental strategies and ideas based on Renko charts. Everything I show here is educational. It's not financial advice, and I'm not making any recommendations to buy or sell. Today's idea is one I use in my own portfolio, combining Renko charts with multiple trend lines to build a more flexible entry and exit strategy. Instead of going all in or all out based on a single breakout, I like to break things up. Just like I break up investments in phases. Let me show you how that works. Renko charts are great for spotting trends. They filter out a lot of the noise that comes with daily candlestick charts. And trend lines are one of the simplest tools you can add to a Renko chart to spot shifts in momentum. But here's the problem. When you rely on just one trend line, it can feel like all or nothing. What if the breakout is too early and fails? What if the price moves before you're confident? That's why I use multiple trend lines to create what I call a laddered entry or phased exit. Let's take a look at this chart. You'll see I've drawn 3 descending trend lines. One steep, one medium, and one long-term. The first line gives me a potential early entry. It's aggressive, maybe the trend is changing, maybe not. The second line is what I consider a confirmation breakout, a sign the move is real. The third trend line is a final breakout, when the trend is clearly reversed. Now, instead of trying to time the perfect entry, I can enter in stages. For example, I might invest 30% of my position at the first breakout, 40% at the second, and the final 30% when the trend is fully confirmed. This approach helps me do something that's really hard. Buy into strength instead of trying to guess the bottom. Not every Renko breakout is accurate. Sometimes it's just a temporary move that fades. That's why I don't commit everything at once. By spreading out my entries, I reduce the emotional pressure, and more importantly, I limit my exposure if the first breakout fails. If the move turns out to be real, I'm already participating. If it reverses, I've only risked a small part of my capital and can reevaluate without a big loss. You can also reverse this strategy to exit positions gradually. Let's say I've been holding a stock for a while. I'll draw rising trend lines below the Renko price bricks. When the price breaks below the first one, I might sell a portion, maybe 25% or 30%. If it breaks the second line, I'll exit more. If it breaks the final trend line, I'm out completely. This helps me avoid panic selling during short pullbacks. And if the trend continues, I still have a position. The reason this works is because Renko charts simplify price structure. There's less noise. The bricks only change when price actually moves. So your trend lines are more meaningful, and your decisions more focused. Using multiple trend lines lets you plan your trades like a roadmap, not just react to signals. Whether you're building a position or stepping out, it gives you structure, flexibility, and peace of mind. If this helped you, please like and subscribe. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.